BHP seems to be buying the world. Why would they be doing that? And interestingly, when it comes to a company like this, there are places around the world which are either heading into recession or in recession, and markets are very choppy, very difficult to navigate. Does a company like this all of a sudden become worth having a lot closer look at for investors if it's not the kind of company that perhaps they've looked at previously?
Right. So there's actually one extra point I'm going to raise here to the rest of your question. First of all, as you talked about on the massive chart about how many dividends BHP has been paying for like 30 years, very few people know.
Welcome to the Exponential Investor podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Good morning and welcome to another episode of the Exponential Investor podcast. I'm your editor, Sam Volkering, here with my co-editor, Shay Russell. Shay, it's nice to see you again. It's been a little while since we've both been on this podcast. You were away, I was sick. Anyway, we're back together again, reunited. How have you been over the last couple of weeks?
I've been awesome. I had a whirlwind trip to Fort Lauderdale in God, where is Fort Lauderdale? I know it's in Florida. Last week. I think I
wow,
did 4 days
that
total traveling. Yeah, that's how much it was. Well, I didn't sleep much for 4 days worth of conferencing. So yes, it's been busy, it's been hectic, but you know what? I'm really just happy to be out again.
Yeah.
What about you? What have you been doing? I mean, I know you've been sick, so you probably didn't go out, but aside from whatever you got, what have you been doing, mate?
Well, I mean, I've been out in the sense that I've been out in my backyard, and it's sunny here, and it's warm, and it's all the things that you'd expect someone to be. So I've been out in the backyard, but no, I have been sick. So thankfully, the kids got something from a soft play center, which I'm sure you're very well familiar with, Shay, about getting sick from young kids from soft play centers and things like that.
Yeah.
Anyway, we're not here to talk about getting sick from our little rugrats. We are here to talk about the markets. And a couple of things caught my eye recently. And I guess we want to just sort of keep this as an open, flowing conversation as we normally do. Also, just a reminder for anyone, if you've got any questions about the things Shay and I are chatting about on this podcast, make sure to write into us at Exponential Investor and ask questions. We can even do a Q&A in the future, perhaps on some of the questions that you send in. Whether it's about investing or a particular industry or anything, or how to not get sick from kids from soft play centers. That would be great. Write in, let us know. We'll be happy to do a Q&A from your questions anytime. But one of the things, Shay, caught my eye this week, well, the last couple of weeks, two of the world's largest and most influential companies, both starting with a B, both ending in a P, but one of them has a H stuck there in the middle. So I'm talking about BP being British Petroleum and BHP being BHP Billiton, the giant Australian miner. So we're talking oil and gas and mining and a whole bunch of different stuff. But they are both very commodities focused companies, an industry that you're very, very well aware of. Anyway, with BHP, the thing that caught my eye this week was they had a takeover bid of Oz Minerals knocked back. Now, for people who don't know what Oz Minerals is, long story short, metals and mining used in technologies. That big mining company. I think $8 billion or something market cap. So again, a big company. But it was knocked back because clearly the board of Oz Minerals thinks that BHP has undervalued them. And I think the bid was still something like 30, 40%, maybe even more over their current trading value. Anyway, I bring this up because it wasn't all that long ago that BHP merged and split off oil and gas assets with Woodside Petroleum, another massive company in the commodities arena. And now they're going for a play at Oz Minerals. It seems to me that BHP, one of the world's biggest miners, and folks, if you want to have a look at a chart, go onto any of the freely available charting software platforms. Yahoo Finance is a very good one. completely free. Go in, do a look up, and check out the max historical chart for a company like BHP. If I bring it up now, and I go to the Australian listing, and it goes all the way back into where are we looking at? Back into the, I think, 80s that I can pull up the chart information for. Interestingly enough, BHP was actually one of the first stocks I ever owned as a child, thanks to my grandfather when I started learning about investment. And it is a phenomenal chart. And what you see as well is that all the way through, you see, when you look at these charts, you'll often see little things like a D at the bottom of the chart, which stands for dividends. This is a company that has paid dividends to shareholders for decades, which is always a great thing to have. But as I say, cut a long story short, and I do have a point here, Shay. I've rambled on quite a lot in this introduction already, barely giving you a chance to speak. BHP seems to be buying the world. Why would they be doing that? And interestingly, when it comes to a company like this, there are places around the world which are either heading into recession or in recession, and markets are very choppy, very difficult to navigate. Does a company like this all of a sudden become worth having a lot closer look at for investors if it's not the kind of company that perhaps they've looked at previously?
Right. So there's actually one extra point I'm going to raise here to the rest of your question. First of all, as you talked about on the massive chart about how many dividends BHP has been paying for like 30 years, very few people know with Australian stocks that you can do what's called a dividend reinvestment plan. So rather than receiving the income, you can actually have that income be put towards buying new shares in a company. And that, for people who don't need the income at a certain point of life, is actually a great way to increase your position in a company without actually having to buy new shares. I myself used dividend reinvestment plans. They're called DRPs. Where possible, if I don't need the income, and often, when you only have small holdings, it's not a lot, but it's a great way to grow your stake in future companies. So that is the question you didn't ask, but I answered it anyway. So let's move on to the actual question you ask, and is that the BHP is recession proof? It's less that it's recession proof, but more that it's buffering itself against commodity cycles. So obviously, commodity driven companies follow the boom and bust. And part of the reason when you look at a BHP chart, those up and downs you see aren't necessarily related, especially up into, let's say, 2003, 2004. That's probably more cyclical within the economy. But after that, it's very much driven by the commodity market. I would say that BHP are positioning themselves to, I'm going to say bulletproof, but I'm not sure that compliance are going to like that phrase. That they're basically positioning themselves to make sure that they're ahead of where the market needs to be. Now, you've got to think, like, as you pointed out, BHP divested their oil and gas assets. They didn't get rid of their metallurgical coal assets. I'll just point that out. But they're moving very heavily into metals. And Oz Minerals is a strategic play for copper. It is absolutely not about anything else. It is about copper and securing more copper. Now, BHP has been quite copper hungry for a considerable period of time. What a lot of people don't know is that BHP, rather than investing in joint ventures or farming agreements, for example, they will make sure they've got the first seat at the table with small copper miners via providing intellectual capital in the form of maybe a particular geo or gifts. All above board, this is all declared in their financial disclosure statement. I'll just point this out. So, for example, there's a US prospect generator called Riverside Resources that BHP knew that they were exploring out there. BHP didn't want to take a stake in the plot, but they still wanted to make sure they had the first seat at the table if the conversation changed and there was something in the ground that was worth talking about. So BHP donated 2 massive trucks. Again, all above board. This is, all publicly disclosed information. This isn't anything that this isn't a big secret, but this is what's happening with big, massive, multi-billion mining giants. They've lost the ability to go out and explore. They don't have strong exploration teams like they used to. The sort of heydays of the giants investing big time in finding more things is gone. Basically, what they're doing now is they're growing by buying. They're buying other great assets. and it's the only way that they can grow their resource base. And if they don't grow their resource base, by the way, they won't be able to maintain their market dominance. So it's a very long-winded answer, and I've sort of gone off on a little bit of a tangent there. But the point to your question is, I think that they're less about following recession cycles that are very much people-led, and it's more about following commodity cycles, or trying to make them bulletproof against those commodity cycles.
Yeah, I mean, overall, when you look at a company, like they're as volatile as any other kind of stock. I mean, you can look back through all the previous, big cycles in the stock market, regardless of what the commodity sector's been doing, and you look at where we got sort of even in the 2000s, they were volatile during, even though they're somewhat unrelated, they went bananas like everything else during the .com bubble, and then did saw a massive drop off. But relative to their price now, that doesn't look like much on the charts. And you come forward to 2008, and just like everything else, they were up around sort of $45, and then cratered to like $20. And then even in 2016, where they really came off massively but that was more commodity cycle related, but then went on this extraordinary run, again, volatile through into 2020 with obviously the lockdowns and everything, when the entire market capitulated, and then had a massive boom. And then last year was as volatile as the rest of the market. And even now, it's, look at the stock, it's $36 in Australian dollars on the ASX. Over the long haul, that's a massive increase. But really over the last sort of arguably 15 years or so, capital return actually doesn't look that great. And so people will look at a stock like BHP and think, well, actually, the capital return isn't necessarily there. The point that I want to make is, with a company like this that's so large, that is actually very vital to a lot of other industries when you go through an entire supply chain, is that constant dividend paying aspect of it. I'm using this as an example because I think a lot of people have fallen away from the idea of the benefits of investing in dividend paying stocks. And like you say, there's a number of ways you can utilize that. Dividend reinvestment, which in Australia, as you say, you can utilize DRPs, dividend reinvestment plans, where effectively instead of getting a check or amount credited to your account, the money goes directly back into purchasing stock at that particular price of whenever the dividend's paid out. So you save on things like brokerage fees and stuff like that. So it is beneficial. It's a bit like compounding interest, but with stocks. Anyway, another way, you can have that money paid out to you as income, and then you can go and buy the stock again or go and buy another stock. But, there are tax implications depending on where you hold that. A whole bunch of stuff that you need to think about. BHP is a great classic example of a very large company that is very important to global industries all over the world, that pays dividends and has slow capital returns. Now, I mentioned slow capital returns, and it is slow over time, and it's volatile, and it has peaks and troughs, but over time, slow capital returns. Because I was having a chat with our friend and colleague, James Early, the other day over email, and we were talking about the average returns in some of the crypto that I've been recommending over the years, and the cumulative returns of some of the crypto that I've provided in my advisory services. Anyway, as it sort of plays out, the sort of average year-on-year return is about 140%. I think it was the numbers that he crunched, and that's after the current market route. And I remember saying to him, I was saying, "Well, that crypto market is a bit unusual. It's not like everything else. It's not like the stock market. It's a completely different kettle of fish." And I actually said to him, I remember when there was a time when I used to think that if I could get 8% year on year and some dividends at the back of it, I would be stoked. Like if you do a long-term 20, 30 year Excel spreadsheet with an 8% year on year capital growth plus some dividends, even just 3 or 4% dividends, you're making an absolute killing in the market. that's the kind of company that a BHP is your kind of your average boring single digit returns over long term with dividend paying. I feel like the market's gone away from that a lot. Like, what are your thoughts on that? Should we revert back to the way that we used to think, or have we lost our way, Shay?
Have we lost our way? I can't help but wonder, do I want to blame the younger generation for ruining it? I
Do
actually
we
don't
fall
like.
into that category? Do we fall into the
Well,
younger
not
generation
really. I
category?
think we're elder millennials, darling. Look,
Don't call me a millennial.
I'm a millennial. You're a millennial. We're just the old ones.
Are we though?
Yeah, 1981. We're the elder. We're actually, sorry, geriatric millennials. I believe that's what the Gen Zs like to call us.
Geriatric.
Yeah,
Oh.
no, kids today.
All
Look,
right.
I don't want to blame the younger generation, and I won't. But I do think the rise of crypto. I'm not blaming crypto either. And the rise of basically, what was that trading company called? Robinhood Trading. I think it's opened up the concept of trading rather than investing to a whole bunch of people. Now, trading is great and it has its place, and I'm a huge advocate for being dynamic, but it's not that BHP shares are equivalent to cash at the bank, but when you save cash at the bank, you don't expect, fast gains. You're there for the compound interest, as you pointed out. I think shares like BHP, Rio Tinto is another one. BP possibly is another one, as I got confused before. I think not everything needs to be about a trade. There are multiple ways of investing, and the best thing investors can do is adapt that to who they are. So, for example, you buy, as an example, BHP shares as your slow form of investing, and then you look at maybe other trading methods for the rest of your portfolio. So maybe it's that we haven't lost our way. Maybe it's that we got all caught up in what the new technology could do and the opportunities it brought us, which is really exciting. I love that markets have been democratized. I think it's awesome that more of us can invest. But I do think there is a place for slow, steady gains that pay a dividend, and that are only going up single digits every year. There is something to be said for steady as she goes.
I can't remember who it was. Was it? It was either. It might have been you. It might have been Nick Hubble. Somebody was recently wrote about get rich slow, or was that someone else?
That was
again,
probably
completely?
Nick.
I
That
can't
feels
remember.
like a Nick statement.
That feels like a Hubble thing.
Yeah, that feels like a Hubble statement.
So, I mean, I wanted to pull up something else as well, and so we mentioned at the top, while we're talking about dividend paying stocks, we mentioned at the top that we were going to talk about two companies, both starting with a B, ending in a P. Just one had a H in the middle. So I want to jump to the other one just quickly, because you've got a book there as well, which I'll get you to hold up in a second, because this is where the confusion lay, or just before we came onto camera. So if we look at British Petroleum, or just BP, for instance, who has recently just, funnily enough, thanks to soaring energy prices, has registered an extraordinarily large profit. But BP is, again, one of those companies over time, massive company. Depending on when you buy, you could have got some. Look, let's be honest. Over the last 20 years, the capital gain on BHP has been on BP has been non-existent. But when you look at the charts, dividends the whole way through. Compound those suckers over time, or even look at reinvesting. Yeah, we can do some math some other time and figure it out. But again, dividend. Shay, what have you got there that's a bit of piece of history about BP that you might want to show?
So this is absolutely embarrassing for a commodities analyst. I'm not one to hide from being an idiot. I got really excited when we were talking about BHP. I'm like, I've got this great book from 1959. Because my boyfriend likes to collect weird things. And it turns out it's not BHP, like I thought it was. It's actually BP from 1959. So perhaps I can't read, and I'm also very disappointed it's not the history of BHP. Nonetheless, it does talk about the oil and gas markets throughout the 20s, 30s, and 40s and 50s. So now that I know what company it's referring to, I probably should read it. But again, BP, now that we've dropped the H, is an excellent example of a company that's had slow and steady gains. The only thing I think when we're talking, because there are a reason we call these big companies dinosaurs occasionally, and like BP has a great chart, don't get me wrong, but it seemed to have not weathered some of those downturns as well as BHP has. That the argument could be here made that the directors over time haven't looked for ways to basically protect themselves against the commodity cycle. They're very much into oil and gas and fossil fuels. Now, we do still need fossil fuels. There's no moving away from fossil fuels entirely just yet. But it doesn't look like that they've taken the decision to diversify their assets. So there's still value in BP, clearly, but it might not be as defensive as a company like BHP's in the long run.
That's a really good point, because we talk about these big companies and they are massive. And what you find is that a lot of people own them, even inadvertently own them, whether it be through a fund or a pension, or in Australia it's called superannuation fund, that a lot of funds are mandated to invest in companies like these just because of the size and where they sit in terms of market capitalization on the markets that they exist. So a lot of people do end up owning these stocks, even though they might not know that they own them. They just sort of own them indirectly through a fund. Or I know a lot of people write in and they talk about, investing in the big legacy companies like BP and BHP over the years and getting dividend stocks. And, it does okay. But it's a reminder that when you do look at the chart for BP in particular, while it does pay dividends and has paid a lot of dividends over time, like I say, the capital return is pretty average. Like capital gains is pretty non-existent. So these companies, you do also have to look at them about what they do and the way in which they do adapt to time, because they don't always make for great investments. They tick a lot of boxes: dividends, size, scale, global influence and impact, making profits, happy days. But they're also not necessarily the greatest in investments to always have. So you do really have to look at things like, what are their future plans? How are they going to tackle a world of net zero? I mean, is oil and gas going to be here for the long run? And so investors need to look at making a call on that. And if you make a call at the right time, you can do really well. If you make a call at the wrong time and it's wrong, it can stink. So regardless of the size of these companies, exactly, you think they can be as dominant and immovable objects as they are in their industry, but they can also not make for very good investments. I wanted to just pick up on one other company that does also start with a B. It doesn't, unfortunately, end in a P, but there's a splattering of other alphabet characters in there as well. But it's British American Tobacco, because it's another one of those companies that over time people have lambasted as being one of the most unethical companies you could possibly imagine to invest in. But over time, this is one of those companies that is just constantly paying out dividends, is huge, has not gone anywhere, even through the crushing restrictions on cigarettes and the punch up in prices and the making it, like in New Zealand now, they're shifting it so that every year they're going to ban it, so that eventually in 10 years or 15 years or something, you effectively no one can buy cigarettes or something. That this sort of progressive age restriction is looking to be rolled out in other places. But then I look at the chart, and while it might have peaked a couple of years ago in terms of its capital value, again you look at those DDDD dividends, and it pays and it continues to pay, which means they make profits, people. And companies that make profits in times like these are always worth looking at a little bit closer, regardless of what your opinions might be around what they might actually do. But, I thought, may as well stick with the companies on the B: BHP, BP, and British American Tobacco. Bat! It's listed on the London Stock Exchange. But again, like I say, you've got to look at each of these companies on the merit, what they do. But sometimes, take some time to consider the boring single-digit gainers. They're as volatile as others, but over time, single-digit gainers that pay dividends. It's not the worst idea in the world.
It's not the worst idea in the world, especially forward-thinking big dinosaurs. They're the ones, they're not going to survive. I'm not going to extend that analogy because it's only going to end badly. But I agree. Look for the ones that are single-digit growth. Now, I didn't have the chance to go through it quickly. I'm furiously typing in the background with British American tobacco, but I do know with Philip Morris that as the restrictions got tighter and tighter on tobacco, they moved into sugar and processed food production. That now takes up a large portion of their portfolio. Now, I'm a lousy cook. I rely on things coming to me pre-made. So the point here, and this is very much a little bit of a British American BP comparison versus BHP and Philip Morris, is these two have taken a look at where the market's going and they've gone and moved with that. And a quick look at the British American website tells me that it's still very tobacco centric or tobacco kind of products, with the vapes or the e-cigs, whatever it is that we're doing. So it could be that in spite of those restrictions, or as those restrictions get tighter and tighter, British American isn't going to be seeing the same growth as Philip Morris. So to add to your argument, absolutely single digit growth companies are worth looking at, but look at the ones that are thinking ahead and are moving to where the market is rather than just assuming the market's going to come back to them.
I think it's also worth taking a stance as well. And what I mean by that is, well, ask yourself this question. People out there watching, investors, is the world going to be using as much, more or less oil and gas in another 10 years' time? Also, is the world going to be consuming, buying, smoking tobacco as much, as little, more as they are now? Or are they going to be doing something else? Are we going to be utilizing more green energy to provide us with the energy needed for our vehicles and for our homes? Or perhaps is the legalization of the cannabis markets going to sweep in and take all the cigarette smokers to a new high, literally and figuratively? These are the things you've still got to think about with big legacy companies that have been around a long time, that grow slow, pay over time. But you've also got to keep an eye on the futures. Where are they actually going? And are they moving with the times, as Shay said? And sometimes the answer isn't going to be the one you want to hear. And that gives you some reason to be cautious around them. But sometimes they take those proactive steps. They make the moves early and invest in the areas that will future-proof them from whatever the world throws up, which is a lot of crazy stuff right now. But anyway, we've gone on far too long today because, I don't know, we just, sometimes we ramble and chat a bit about random things.
We just like chatting.
Any closing remarks, Shay, that you want to chuck at our viewers today?
The absolute goal is to find the BHP before it becomes the BHP. And I have been told we all get one of those unicorns in our investing lifetime. I don't know which one it's going to be, and right now, but the goal of investing is you want to find your own BHP before it goes and becomes a BHP. I've got, I'm quite heavily invested in commodities. None are a BHP yet.
Yeah, that's a fair point.
That would be my closing remark. Try and find your commodity unicorn.
BHP while it's just a B.
Yeah, well, it's just a B before we had the H and the P.
Before the H and the P come. Wouldn't it be great if we could all do that? You only need to nail one. Maybe two would be handy. I was going to say that there's been at least, in crypto, there's like 4 of those a year. But anyway, that's another story, another conversation for another day.
Talk about that one next week.
As I said, it's a different market. Anyway, everyone, thank you for tuning in to the Exponential Investor podcast again. Nice to have us both back on deck with our little banter pants. We'll be back again next week, as usual. If you've got any questions about BP, BHP, BATS, or anything else, fire them our way. We'd love to do a bit of a Q&A session for anything that
Yes.
you want to know
We
about.
should do an AMA.
How to invest, where to invest, what to invest. We can't obviously give any advice, but we can give you our knowledge and insight, because that's what we're here for at Exponential Investor. All right, that'll do. Thanks for watching. Bye for now.